hold an open house this weekend. Shit, hold 3 open houses this weekend.
Hey, what's going on, guys? Jeff here, Mitt here. Welcome back. Another Foundation Capital, a little roundtable discussion. PV's at an investor breakfast right now. But Mitt, I wanted to tell you there was a really cool reel, and I wanted to post it on social media. Where it was like day in the life of a real estate agent in 2026. And it was like, do an open house, do 3 open houses, send birthday cards, do in-person events, do networking events. Don't forget their birthdays. And the list went on and on. It's like, negotiate, talk to mortgage brokers. And I'm like,
do you know what it's like to be an agent in 2026? Let me tell you. Make 20 new contacts a day. Write 5 new thank you cards to be sent every week. Send neighborhood mailers. Get to know all your neighbors. Farm your neighborhood. Get really good at AI. That means ChatGPT, Claude, Cowork, Perplexity, whatever else they come out with today.
Man, I got to produce that in a real estate investing sense. Because when you think about our day-to-day, what we got to do every single day, and you're doing amazing with that, because it's like, do AI, do Facebook ads, talk to the mortgage broker, talk to the lawyers, talk to the insurance, talk to the seller, talk to the seller's real estate investor or agent, negotiate the deal, sell the deal, lease the property, deal with the tenants, deal with the mice, deal with the raccoons, deal with the police calling me to say, I got to get in right now. And it's like, holy crap, when you think about it, man, it's
there's a lot of different hats that we play. It's funny that you bring this up, because honestly, I was thinking about this too, because as everyone probably knows, it's not like we're paying somebody to edit our social media. It's usually us. And I got obviously been posting a lot more on Instagram, TikTok.
Do TikTok.
Trying to get more on YouTube and stuff.
Get swag. Send the swag out. Make new swag.
Yeah.
Get pink swag. Get black swag.
Yeah. So if investors are wondering why you haven't gotten swag, it's because it's just like we are the ones dealing with it. Mm-hmm. And you could argue we could hire an admin to maybe resolve some of this stuff, but it's like very opinionated taste things. Like when we do the swag, we are editing the swag ourselves, being like, would people wear this? Do people like it? And there's always competing priorities. But turns
into like a half-hour meeting. Like,
dude, you have to think about get through development meetings, get through. Look at existing assets. What are we doing for leasing up? All that stuff, and then
acquire land for developments.
Yeah.
That's not just. Oh, let's just put that in the calendar. That's a lot of nuances to that.
Yeah, but I think it's pretty good. I think we're pretty scheduled for like our other check-ins and stuff like that, and getting things.
Don't worry, I'm just segueing to investors should be just passively investing.
Oh, 100%. Because the crazy part is, like, when you think about it, if you have a full-time job. And then you're like, okay,
don't say the job word.
CPI came out. Where's CPI at? Okay, what's going on with jobs in the market? And okay, well, if my tenant can't afford rent, how do I get them to be able to afford to pay rent? Like, contact XYZ entities to get them rent supplements or guide them there. And it's like, yeah, you're spending quite a bit of time. And I mean, obviously, some people will pay property management like 10% of their rents. But then you're pretty much at like, why wouldn't you invest in our REIT where you're paying only like it's overall 5% for property management and you're getting scales of efficiency, right? And it's
I had breakfast with a guy yesterday, future investor, and they'd be way too busy to do any of this kind of stuff. They got the family life and full-time employment.
Well,
right?
it's
good
that
they're going to own one triplex, but
it's good. It's good you brought that up, because that's honestly the kind of conversations that we're having across the board. So you've got a lot of IPOs like SpaceX, Anthropic, OpenAI coming out. Apotex in Canada is going to IPO, and we saw Google do that $80 billion announcement. And so if you're a regular day investor who's working their 9 to 5 and then trying to keep up with all the things that are happening in capital markets, 2026 and like, I guess going forward, it's just there's so much information out there, so much to consume to decide where you're going to allocate money. And the tough part is with social media, you've got guys who will have, say, put all their money into Marvell or like an NVIDIA or AMD at a time and saw like a whole ramp, but that was their entire portfolio. And they're like, oh, look at my success, which is a great success story. Congratulations to them. But you realize there's a point of you need diversity as well, because what happens if there's a sanction on one of them or something happens. And that's why I guess most professional traders or even portfolio managers will have anywhere between 25 to 50 positions across your portfolio. And a conversation I had with one of the accredited investors I was talking to is he's like, I'm trying to get my money up to $500,000 so I can give you guys $500,000 in one chunk. And that's enough passive income. And until then, I got to keep trading. Similar with another guy I talked to yesterday. And they know they're actively spending time doing the research in order to manage their portfolio positions because, there could be an announcement through Trump or something and, it'll completely turn. So it requires about like 20-ish hours. And that's why they're doing well. But 20-ish hours is like a part-time job and sometimes full-time job, frankly speaking. So tough if you're trying to actively manage your portfolio. And then you have the group of folks who have financial advisors who will say, all right, let's just buy the index, which is totally fine. I mean, I recommend you should, like for most average people, should probably just own the S&P 500. You can buy a little bit of QQQ, which is the NASDAQ 100, and get your exposure that way. But you have to take a look at what's in those underlying ETFs as a whole. And I believe at some point, NVIDIA is like 8%. Of the underlying holdings. So you're heavily weighted towards technology, which is, I guess, positive as technology is booming and growing. But there's also times where you might need cash flow and things like that. And we actually saw now the Canadian banks are at basically double the valuation of what we're trading at historically over the last 10 years. And so people are going towards flights to safety with the banks. But we're getting open banking this year. And so there's a lot of other factors that you have to look at to the underlying holdings when you're holding ETFs as well that maybe aren't being covered. So obviously people pay a financial advisor 1% to 2% or other fees in order to be able to manage their portfolio, which is great. A lot of folks that we deal with obviously are those who have, let's call it 60 to 70% of their money in, let's call it stock market, but they know they want to have consistent returns, right? Like I think right now NVIDIA is down like 2.5%, 3% average as we're shooting this. The problem with retail and a lot of people is like, if you're catching it at the end of the day, you're like, okay, let me buy into this, quickly while you have 5 seconds to do so during your day. And then you're not really paying attention to what's going on. And so now today when it's down 3%, that's pretty gut wrenching. And so,
and then the retail investors probably invested because they heard something and it's probably on its way up and they're getting in late.
Yeah.
And they're just going to get burnt. And we've all done that. Like, oh, Bitcoin's going under the moon. And, oh, I better get on the train. Oh, now it's going back down.
See, it's funny because when you look at asset managers and how they allocate capital, they'll look at something like Bitcoin being down really a lot right now. And if they believe in the asset, this is the time when they'll start accumulating. And as sentiment shifts towards it being more bullish, they'll look to offload part of their position, right? And it's actually similar to when it comes to real estate as well. So the people that invest with us, they'll probably do anywhere between 30 to 40, like 20 to 40% of their net worth. We've got a bunch of folks who've been following us for a while, just jumping in for 10 to 100K amounts. And it's been great reconnecting with some of our old investors as well, or people that were in our network. And, we got a surprise 250 in our development fund this week, a couple more meetings where our development is kind of filling up. And that's just because, it's a private opportunity only for accredited investors, generating them about 24% return. And they're basically going to be able to double their money in about a 4-year period from a standard process of business execution, right? And as people saw from Dev 1 to Dev 2, returns we were offering went from 27 to 24. And that's just because of the demand that exists out there and for the quality of projects that we're completing. So, all in all to say, you've got so many options as an investor nowadays. You can allocate your money anywhere. And we're not saying you should 100% allocate all your money to us or real estate. It's an important thing, especially if you have a family and you're worried for their peace of mind, that you have a combination of both. Real estate, whether you own it yourself or through a REIT or through another fund or whatever vehicle, is illiquid. A single family home still takes 3 to 4 months to sell. Maybe you get it sooner than that. If you want to get a proper price on a multifamily property, it's 6 months to a year. And I'm sure you can speak to all the nuance, the back and forth that happen even when you think you're firm. And so what you want, though, is those consistent kind of returns when you're investing in something where you're going to get cash flow, principal pay down, no matter what, it's kind of going to be there. versus just keeping it in a checking account or savings account, making you like next to no money versus inflation. So a good amount of our investors have that split. So they have that liquidity of, okay, if I pass or something happens, my family can sell the stock and they can utilize that to live and sustain themselves. But ultimately, it comes down to unique opportunities where you can continue to grow your wealth. The wealth gap in Canada continues to increase. We're in a technical recession, but you're seeing luxury homes still move, right?
Mm-hmm. Well, I want to pick your brain because you made a good post yesterday on Instagram. The foreign buyer ban ends at the end of this year. So Jan 1, 2027, it's lifted currently, unless something changes again. As a real estate agent, I didn't necessarily see it in Southwestern Ontario, but I'm sure the money came in from overseas and China, et cetera, that, you didn't necessarily just see some foreign offer come into your inbox, but there was like an entity that would have made the offer that was a Canadian, so to speak, right?
And it's a duality to it, right? So you've got these foreign buyers who'll probably buy in like Toronto and the GTA,
Yeah.
which then drives Toronto GTA buyers that are Canadian to then move over into secondary markets like London and the surrounding area. A big thing that I guess like we're not like predicting the future. We don't know 100% what might be happening, but a lot of things that we look at is we just look all around the globe. I think we're all well traveled here at Foundation Capital. A lot of what we see and what we're building is by looking at where has, let's call it Mark Carney, represented previously. He's represented previously in the UK. He's got good relationships with Europe. Well, if you travel through the UK and Europe, you realize apartment sizes go down in size.
Yeah, it's a good, really point.
A lot of people no longer buy homes unless your family gave you money. It's a lot of just renting, and you're renting bedrooms and things like that. So we see that future kind of happening here. Like there are people are saying, okay, we're going to build homes faster so people can own their home and stuff like that, which again, I think is commendable. But there's also a lot of obligations that go with owning a home, right? You've got to do maintenance around your home. You've got to do your grass cutting. You've got to
tell me about it.
Pay your mortgage. You got to pay your property tax.
New air conditioner.
Yeah,
7,500.
And a lot of people don't have. Even if you make a lot more money, it's a pain in the ass. Like I'm a homeowner, it's a pain in the ass. I hate that's not really a fun activity for me.
Every time I have a home bill, it's like, I just have a condo or something.
Yeah, we met with this one guy who lives downtown with his family, and instead of buying a house, he just he owns one and he rents another condo that he utilizes. So when family or people come over, they can host in the other one.
Yeah.
And he's like, well, I'm a busy business owner. I don't really have time to deal with whatnot. And, yes, you can get a contractor or service provider to provide you those services, but you know how that goes. Like,
oh yeah,
they don't show up on time. It's not consistent. That kind of
thankfully, I have Foundation Capital's resources to help me out. But if I was just I'm like, sometimes I say to my wife, I'm like, what would normal people do? Like as things break around their house, because you get hosed on contractors all day long, right?
Yeah. So, you don't get the scale mitigation of costing, but
but yeah, I challenge our investors if you're from Europe or you've been to Europe and you go to those hotel rooms and you're like, man, this is a good concept. Like everything's pretty compact, and I think we are one of the first apartments investors to put the laundry in the kitchen, so to speak.
Yeah,
we started that like 4 or 5 years ago.
Yeah, I think we pushed like in-suite laundry in like London, Ontario, because prior to that, people were doing the renos and they were doing still go use the common laundry, and we're like, this makes no sense.
Landlords on Instagram going to collect their coins.
Yeah.
And we're like, I don't think the millennial renter wants to use their toonies in the basement.
Yeah, not just the millennial. I mean, I think I was on the disability housing forum, and it's like those individuals prefer that they don't have to randomly interact with strangers they don't know, that they're not comfortable with. And they can just do
you want to sit there and watch your underwear for an hour? No,
So it's quite an interesting mix. So all in all, when we look at Europe and we look at the UK and things like that, and we look at the climate of where the world is, what we see is that people want like consistency or safety, security. Despite what other Canadians might say, we've got quite a bit of that here in Canada, which is why there's such a high demand for immigration, especially for families. And that's where, like, obviously we're filling our piece, and why it's going to be very interesting as we see like wealth transfer through generations over the next little while. The biggest piece now is Eli Lilly has been coming out with phase twos and threes of their various trials with um, their retatrutide and a couple of other peptides that are basically addressing. They have some oncology products as well that are solving for like lung cancer and things like that. So what we expect is that if all this goes well, and with all the capital being allocated towards longevity, now people are going to live longer, right? So now all the eclipse that people, maybe some mathematicians and statisticians were saying like, okay, well, they're going to die at this age and then this housing is going to be available. Well, who knows? Now you're going to be living longer, or your tenants are going to be living longer. They still need a place to live, so you're going to have that shortage coming from that. But now, when you're living longer and you need more healthcare treatments and stuff like that, well, now you need to spend more dollars on nursing homes, care homes, things like that. Which again, there's already a shortage on the care homes. But the biggest bit is now who cares for them? As you have our population aging out, you need more young people. We're not birthing enough. So my thesis at least is that there's going to be a continued long-term sustained immigration that's going to turn back on. And so if you've been holding your real estate up until now, and you're not bleeding out too hard, it's still worthwhile to hold longer term for you to be able to see that upside. And that's kind of the thesis that we see, is that as much as you have Canadians saying, oh, I'm going to America, I'm leaving the country and escaping, there's a lot more people that want to come in than leave. So overall, Canada's in a pretty good spot. And the government on the federal and provincial level is being very supportive of all the housing initiatives. So our investors understand that. They're getting in for that. And I think all the activity you're seeing in the market, even at these lower prices now, is because people know like there's a floor. At the end of the day, these stock market gains need to go somewhere. Some people will hold it out, but in reality, when your wife nags you like, why are we living in a rented apartment? We want to have a family and I want a house. You're going to eventually capitulate and sell. Or, if you're a female who's been living in a condo and wants to buy a house herself for their family, they do the same thing, right? So you take some chips off the table. Sometimes it's not about getting, the maximum return possible, as you can see online. Most of the times you're aiming for 80% of the max return, or whatever possibility is your threshold, and kind of being content with it. So I'm thinking a lot of the IPOs is going to bring up a lot of capital. We've already seen the luxury market start moving quite a bit. And when all those properties get bought up, all that happens is what's called the mid-tier starts to rise as well. So
just before we end here, did I tell you that a lot of the estate lots around me just kind of disappeared in 1 week? They all sold. So it's like, I don't know, something at the estate lot level.
Yeah, no, it's because people have capital, right? And they've been waiting on the sidelines, waiting for when it's going to kind of hit bottom. And at the end of the day, people need a place to live, so they'll pick where they want to live.
Well, and these are not the subdivisions. Like
100%.
there's still money out there. People are still making money in Canada, and they're going to continue to make crazy amount of money in Canada.
The tough part is, and like I guess I recommend everyone to look at, is make your investment decisions based on what you want for your lifestyle. Have an honest sit down with your partner. Decide, are you going to continue to rent? Are you going to be buying a home? When you're buying a home, where is that going to look like? What kind of day-to-day do you want? Like, I think it's a new exercise I'm starting with investors, is like, okay, you're obviously talking to us because you want to invest with us for real estate. We obviously give you 7% cash flow annualized, paid out on a monthly basis, 8% appreciation in the REIT, 24% on the development. Like, what's your goal? What does 5 years from now look like for you? So you're at home with the kids, you're on vacation. Are you constantly watching your tickers? Are you constantly dealing with phone calls from tenants? And it's something that people have to manage. And I think the investors that have done it well with us, that invested well with us and have also done well overall with their overall portfolios are those who ask those questions and don't just say, hey, I'm just going to keep waiting. I'm going to keep waiting. I'm going to keep waiting. There's an opportunity cost with your capital just sitting in your checkings and savings accounts, right?
I could segue with, it's so nice that we have the REIT and then also the development, because right now, even yesterday, I was having a conversation with a guy and he wanted the cash flow annually so that he could just spend it on his family. Boom, you're a REIT investor right there.
100%.
And then you talk to another guy and they're just like, I don't want to touch it for 5 years. You know, they're a dev investor.
Yes, exactly. I think a big piece that people forget is like, and we saw this because we were doing all the like London real estate investing when all the retail investors were all around, is you can try to chase maximum investment return or pick a return that makes sense for you, for your family and your lifestyle. You want to enjoy your life. You don't want to just live a life of you saved every dollar, you invested it to the max capacity, and you killed it. Maybe that's you. And if so, you should go out and be an asset manager or a portfolio manager and pursue those things. But if you're a regular person, what you want to do is be able to go on your 1, 2, 3 vacations, be able to pay for your kids' school, take a trip with your family, your wife, etc. Maybe buy a nice car for the summer or something. Just take those little wins. That's really important. And especially if you're a tenant, to be honest, like if you're a tenant in this market, you can't obviously invest with us in the sense that you need a minimum of $10,000. If our tenants have $10,000, you can definitely invest with us. Feel free to reach out. But you need to have your capital working for you. The ability to make money right now is available for those who are willing to put in the hours to learn AI and things like that. But if you're otherwise not, and you're just trying to stick to your job, then like, man, just start buying, set up a Wealthsimple account or another account.
Big news for Foundation Capital. We're excited to welcome Ed Holder, the former mayor of London, Ontario, as a strategic advisor to our team. You know anything about London real estate? Ed brings decades of leadership experience and deep relationships within the community, as well as valuable insight into the city's growth and development landscape. So as we continue advancing our development projects, having someone like Ed who understands the city, its future growth, and the key stakeholders involved is going to be a huge advantage for us and our investors. So we're very excited about that. We're currently developing 2 purpose-built rental towers in London, Ontario, and we're excited about what these relationships can bring to the table and what these projects can bring to the community and for our investors. So if you're interested in learning more about these opportunities, send me a DM or visit foundationcapital.ca to book a call with our team. Lots of exciting things.
And just buy some ETFs and just slowly stack to and forget about it. Don't just rely on CPP and OAS, because your CPP is dependent on how much you're earning, and your OAS is going to get capped as well. And I'll tell you, retirement homes aren't cheap. It's like 5-6 grand, and if you want better service, even more. So it adds up. So plan accordingly. Sometimes it's not fun to plan, but if you want that peace of mind, that's what you need to do. And it's been interesting. Like I'm sure you had that conversation with your buddy yesterday with his family and what they're up to.
They just want to get the cash flow and use it, and they got sports going on and stuff, and it's not their only investment vehicle, but it was like, here's an opportunity, here's the way to get some cash flow, and I'm going to use it tax-free through the TFSA.
Yeah, it's also tough because with social media, you have people showing like, oh, I'm doing it all. It's like, no, you're doing it all if it's your business. Like, we're only doing this because it's our business full time that we're addressing this.
Yeah.
If you imagine, can you imagine you were working at 9 to 5, then you had took your kids to 2 hours of sports each day, like you were mentioning yesterday on Instagram, and then had to invest?
Yeah. Well, thank God I'm on this side. Yeah. But holy, it's a lot, and we're happy to do it for our investors for sure, but pretty impossible, I think, for everyone else.
Awesome. And I think some of the things that we've been doing as well, going back to one of our original points, in order to manage our wild and wacky days of being everything from, let's call it the janitor to the asset manager,
Oh man,
AI has been phenomenal for us. I know I'm continuing to improve the command center and the things and capabilities that's possible. I'm probably going to be releasing some videos on that soon. I know it's been helping you with some of the flyers and stuff that for potential opportunities for investors as well.
I've always said, guys, for like 15 years ago, I was in Afghanistan and I stared at the same moon you all see. And I remember, like, if I didn't know what I was going to do in my life, and now I can operate real estate via my lap. Well, at the time it was like the laptop lifestyle, like Tim Ferriss and all that.
Yeah.
And now it's like your cell phone lifestyle, right? If you can't do it on your cell phone, you don't even want to do it. But we're operating a development, a REIT, all our non-for-profit stuff now, affordability, all from our cell phones through AI. You're mostly at the laptop, but it's just like, well, I don't know if there's freedom because we're stuck to the phones and the computers, but I mean, what a cool experience we get to do right now in our world. We're a lean company. We don't have a payroll, and we're just using AI in our phones to make this all happen.
That's where I think a lot of people are seeing as well is smaller players are going to have the ability to, let's call it, catch up and outperform in providing solutions to bigger players just due to the willingness to utilize the tools out there. If you're a business owner making over $500,000 a year in Canada, you know you're getting absolutely destroyed on taxes. If you're not set up well, you're losing hundreds of thousands of dollars a year. My name is Mitt. I'm a CPA who had an accounting practice helping hundreds of investors and business owners invest in real estate. If you're interested in figuring out how to structure your investments so that you can keep more money in your pocket and make 15% plus target returns investing in Ontario multifamily real estate, shoot me a message. But I will say it is somewhat not annoying. It keeps you on your toes because some of the stuff that I built, let's call it a couple months back, now, OpenAI releases a feature for ChatGPT. You can just build your whole website just through like a quick, simple prompt. And it builds it out, gives you a whole spec, and you're done. And you're like, man, I spent like 5 hours on this before, when we were going through
Don't even get me started.
the other stuff before. Yeah, we were complaining about like, oh man, we can't find the right person to edit the website, make some changes.
Oh my God. Yeah. I'm like, oh, Jeff, learn how to do a website. Okay. It's like, now it's all AI. Yeah, no, it's crazy how the world's going to just shoot forward in the next 5 years, 10 years here. When Elon bought X and he fired all the X employees and went really lean, and now it's working a lot better than it did before. And same with GameStop, and same with what he wanted to do with eBay. And I know we're dragging a bit.
No, you're not dragging. It's the truth. It's happened to the banks too. That's why there's been a bunch of bank layoffs, and then people are like, "Oh, this is happening," and you're like, "Wait, nothing's changed. You're still getting the same shitty service you were before."
Some of our investors that work in the bank sounds like, you'll see, you're not gonna have a piece of paper in that bank ever again. Like, it's just gonna be complete digital.
Hey, remember when we used to tell the lawyers, like, they're like, sign us a wet signature back, and we're like, dude, where am I supposed to get a printer?
That was pre-COVID. Everything had to be at the lawyer's office. I still see the Americans doing that. Like, oh, I bought in Idaho and I'm signing at the lawyer's office, and I'm like, DocuSign. It's like the lawyers, they gave us some BS pre-COVID. It was like, oh, the law society has to sign it in wet signature, and now it's like, okay, whatever, we'll just sign on Zoom, and we know it's you, and they eat that if it's not.
100%. And there's actually a bunch of organizations now and things where like you can connect your bank account to AI and it can do movements and things. So
even at the lowest, 10 years ago, I became a real estate agent. DocuSign was like $200 or something like that. I don't know what it is now. 250, 350, 400. And you have to buy everything when you're a new agent, which is kind of like the beginning of this YouTube video when it was like, oh, you gotta do birthday cards, you gotta do this, you gotta do open houses, you got signs, everything. And I remember talking to one of our buddies, SBH, and I said, hey, should I buy DocuSign? And he'd be like, you'd be stupid not to.
Yeah.
And I was like, okay, that kind of stuck with me. I'm like, so I did buy it, but the agents that I had just met in 2015 were like, nope, people like me in their house and going over the contracts with them at the kitchen table.
And don't get me wrong,
I'm listening to that in 2015.
Yeah.
And I'm like, I just don't see it. And I went DocuSign, and I was like, brand new real estate agent ahead of the game right away. Yeah. And everyone else was driving around the city with their pen and their paper.
And it's funny because a part of that is it comes down to education and communication. So you're having to manage your seller in person with a piece of paper and walking them through if you haven't educated them or talked to them beforehand well enough, well before you're going to the final signing.
But it comes down to society is valuing time so much more now.
Yeah, it's about trying to leapfrog that, have, protecting your time as well, especially as with your family. It's like, oh wait, no, the realtor's going to come over. We need to block 2 hours for this. Like, you don't have time for that. You're going to
No,
review it when you can. I
I'll
mean, we
just click
see.
my phone while I'm watching my kids in the pool.
Well, I think
That's what the seller's going to do, right?
a lot of
Yeah,
our
or the
stuff
buyer.
is like calls getting booked on Calendly and stuff like that as well. And we see people reschedule according to their schedule preferences all the time, right? And so
exactly. So all that is what we got going on right now, and excited for our future for sure.
awesome.
So thank you guys for being part of our journey. Stick around on the YouTube channel, watch some of our other videos, or follow me and Mitt and PV on Instagram. Get on our newsletter, like and subscribe to this video, subscribe to the channel. We're posting every single week on this channel. So really appreciate you guys, and we'll see you guys on our next video. Bye.
Thanks, everyone. Bye.